Yeah, big match today, Brody.
All right, sorry about the late start, guys. We're gonna jump on it here. All right. We had a great reversal in the U.S. market last night, trading exactly to that 1398 level, or sorry, 1598 level that we talked about on the S&P, which is where support was. It was literally bottom tick. You can see down here we made a reversal off of that level of about 25 points. We ended up getting all the sectors in the green. Ended up being a reasonably solid day, and to be honest, the data that it was out earlier in the day wasn't there was no big surprise, I think there. There was nothing new that really, I think, shook markets yesterday. It was just kind of a follow through from the back of some recent disappointing numbers, and also obviously a little bit of risk off and profit taking that from the initial rallies we'd seen at the beginning of the year. Asia saw some wild swings overnight. We'd been talking about this Japanese yen and it really being a leading indicator. I think last night was kind of a perfect example. We finally really dropped it, and you've seen what it's kind of done to everything. With some wild swings in the yen overnight. I think we did, if you see this little part here, I was talking about that this morning, we did about 300 basis points, so 3% in the yen. I mean, we're talking about the second biggest currency in the world, maybe the third biggest currency in the world after the US dollar, tank 3% in 30 minutes. And it's quite an amazing move. I was kind of caused by a few things. We had, first thing I think was, as soon as we dropped 99, we had talked about that level being 100. I think a lot of the stops must have been around 99. People were trying to get a little leeway through 100. As soon as we dropped 99, it started to trigger. Then we had a lot of commentary out of we had the commentary out of the finance minister saying that he wouldn't intervene to weaken the currency. So that obviously gave it a little bit of a push to the upside. And then later we saw Abe that said that and lawmaker Yamatomo that said that it could return to 110 with the expanding monetary policy. So that started to give it a little bit more weakness there later toward the end of the day. But you can see there's been wild swings on the Japanese index, the Nikkei, for the last few sessions. Last night was no different. I think right now we're about flatline, but we've been as low as down 3%, as up as much as 1% So, the swings are starting to get wild. The volatility in our market as well as the other markets are starting to get really heavy. So just make note of that and be careful when you're playing in certain counters. There's definitely room for real volatility again in this market. All right, there are no earnings out today, but we have several stocks going to ex-div on Monday. That's Pick and Pay, Barlow's, and Able. So don't forget that toward the end of the day plays today. We have later today we've got German industrial production that's out at noon, and then obviously in the States we get the big ones, the non-farm payroll and unemployment rate. So. Just to talk a little bit about the non-farm payrolls, I think this number it has as much importance as it's had in a long time. This is obviously the biggest number that we really look at for the most part every month. But the data's really starting to soften of the last 3 weeks or 4 weeks maybe. And I think this one's really, really important. I think if we do see a big miss on the non-farm payroll number, I think we'll really see a spike up in some of the precious metals like gold and things like that, because then it'll kind of, in my mind, that'll be a confirmation that they're not going to taper by the end of the year because the economy will still be too weak. I think the market's really going to pay a lot of attention to it today. And to be honest, I don't know if it's that would cause a protracted sell-off or not, meaning that Bernanke would be around for longer. But be a very big number today. I think a couple hours before is probably good to get the book square and just wait and see what the number's going to be like before you make any more moves from there. All right, let's jump into the maps. All right, first thing I'll show is the S&P. We talked about this level. I'll just shorten it up so we can see a little bit better. And it's only a wick, so it doesn't. But we talked about this being our level right here, 1598. We called that literally on the number. That's exactly where we traded down to not last night. You can see there, top left, 1598.23. That was the exact low of the day. And then we managed to reverse up about 25 points from there. That was really key. The German market also has came down and kind of closed really right at support. What's interesting, and I can't show you, but my data just doesn't look really great. Well, I'll try to show you. The DAX contract did trade to that support line last night during the U.S. session. We traded just through it and then managed to come back and close kind of nicely above it. You can see where it's trading this morning. But those are two of the major, the major European index, major U.S. index. Both came down, touched support. Like we said, usually, when you pull back, have a nice, quite reasonable pullback into a major support area, the first time typically holds. It looks like we may have gotten that. I think I'd like to actually see them come back down and test it, consolidate, and then push higher. But it's something to watch for coming up in the next couple sessions. All right, we'll have a look at first trend here. Let's back out of this. I mean, this thing's just really been hit hard. I think if I could just show kind of from where I would say we really broke down from was kind of around the 30 level, and that breakdown kind of happened. Let's just call it 33 to 33 and a quarter. We from that breakdown of that level, we should be looking for $3 and a quarter. We've really gotten that. So just one thing I wanted to point out is that I think the target's more or less been reached for first trend. Same sort of thing I'd look for in MTN. The breakdown from this little this flag pattern that we kind of had going for a little while until it gave support here at 176, and it really came all the way from 186. Also be looking for about $10 to the downside. We closed at around 166. That's kind of, to me, kind of target being reached in MTN. Standard Bank. I wanted to show Standard Bank just because, obviously we've been talking about a lot of these banks, but this one is obviously held on a lot better than the rest. And I just wanted to point out, recent lows we did come down and test the recent closing lows at 108.20, 108.30, somewhere in there. I think if we get below there and can hold below there, we could see quite a bit more downside out of Standard Bank. I think it's just it's a kind of a crucial area to watch. I mean, this pattern looks so perfect in its symmetry on either side of this, the amount of time and the kind of steepness of the move, that this could actually mark a little bit of a double bottom for the recent move in Standard Bank, 108.20, 108.30. So watch that one closely. I also think that that's going to be a big level for us to watch the next day or two in Standard Bank. All right, Bidvest. Bidvest, same sort of thing that we were looking at earlier. I mean, this thing was really also making it kind of a flag, here. We dropped about $10 outside the flag, down to around 240, from dropping what was the bottom of the range there at 250. I think it's target may have been reached. I mean, it's nothing that's incredibly well defined, but we also kind of held support there from where we broke out on the closing basis around 240. I think it's also a major level to watch. And I think, guys, the one thing that I would stress is that we're throwing out a lot of support plays right now because we have been in a bullish market. We held support on some major levels on the indexes globally. In my mind, we at some point are looking to take risk again on the long side because we have been in such a bull market. We could be way early right now. So I think it's just really important to watch, see if these levels hold, and once they start to prove themselves, maybe get a decent green bar put in on the charts, then we can maybe look to jump in on the long side. So just be really careful about that. We're throwing out a lot of long ideas here, but they're just ideas, and it doesn't mean we're going to be piling into these things. I think it's kind of a wait and see approach, and if they start to pan out, then we jump on the back of them. Okay, mutual also. What was that? Taking me all the way back to 2003. I'll just jump back into the year chart here. Okay, so mutual also coming down to key support. These things. I was actually looking at the difference in some of these charts with some of the London dual listings, and some of the London ones have absolutely had such a beating. And and here they haven't fallen very much. It's strictly because of the rand. But right here around 29.20, I think there's somewhere between 29.20 and the wicks are kind of right around where we closed, which is about 29.50, call it 29.40, somewhere in that little range. I think it's a decent, maybe a decent opportunity to put some risk on. And Old Mutual, like I said, this thing's been hit about 15% in London. And then the last one I'm going to show is Discovery, which is also really at major support. We talked about this one maybe a week ago when it came down and tested. We had a nice bounce up of about $5 from when we first tested here. You can see spike drop all the way up to 84 from these levels. Sorry, about $4 from 80. Coming right back down, we tested this level again yesterday. We managed to close a few cents above it. This is a crucial level for Discovery, and I think if it drops this level, then it could have quite a bit of more downside. And that's it for today, guys. Thanks a lot.